Good afternoon, ladies and gentlemen. Welcome to the Q4 FY23 earnings conference call for Motilal Oswal Financial Services Limited. We have with us today Mr. Ramdev Agarwal, Chairman, Mr. Motilal Oswal, Managing Director, Mr. Naveen Agarwal, Director and CEO, AMC, Mr. Ajay Menon, CEO, Broking, Mr. Ashish Shankar, CEO, Wealth Management, Mr. Shalibhadra Shah, Chief Financial Officer, Mr. Chetan Parmar, Head Investor Relations. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I would now like to invite Mr. Naveen Agarwal to make his opening remarks. Thank you, and over to you, sir.
Good afternoon, everybody. It is my pleasure to welcome all of you once again to the Motilal Oswal Financial Services Concall for the year ending March 2023. I'll start by highlighting a few achievements for the year. During the year, we had the highest ever profit after tax for our capital markets business at 505 crores. The asset under management for our asset management, wealth management, and private equity businesses collectively crossed a 1 lakh crore rupee mark. Within that, the wealth business had the highest ever net sales at about 5,810 crores. And the housing finance business, once again, after quite a few years, crossed a disbursement mark of 1,000 crores during the financial year. Let me now take you through some of the highlights of operation and then financial performance. So our operating profit after tax for the year March 23 grew by 6% to 879 crores, and for the quarter was at 233 crores. This comprised of a capital market business profit of 505 crores for the year and 135 crores for the fourth quarter. Asset and wealth businesses earned 258 crore PAT for the year and 66 crores for the fourth quarter, while the housing finance business reported a profit after tax of 133 crores for the year and 31.5 crores for the fourth quarter. As a result, the consolidated net worth of the group stood at 6,250 crores. Net debt was at 6,630 crores. Our gross debt equity stood at 1.6 times, and excluding the home finance business, the debt equity stood at 1.2 times. We declared a final dividend of 3 rupees per share, and including the final dividend, the total dividend for the year stands at rupees 10 per share. Effectively, our dividend payout policy, including the buyback for the last couple of years, stands at about 28%. Turning now to individual businesses, starting with the capital market business. This business reported revenues of 745 crores for the fourth quarter, which is up by 8%, and 2,833 crores for the full year, which is up by 11%. Profits stood at 135 crores in the fourth quarter, led by healthy volume growth of 10% quarter-on-quarter and almost 2.6 times on a year-on-year basis. An improvement in retail F&O market share was about 1.16%, 116 basis points on a year-on-year basis. The retail broking business acquired 6.5 lakh clients during the year ending March 2023, following traction in online channels. The NSE active clients stood at 8.1 lakhs as of the end of the year, and we now have an improved rank, number 8, in terms of active clients. Our distribution AUM grew to 21,300 crores, up by 17% year-on-year. The distribution part of the retail broking business saw net sales of 1,280 crores, and given the 55 lakh client base of this business, we see improved room or headroom for cross-sell. Insurance premium was an area of focus. This business reported 120 crore premium income, which is up by 120% year-on-year. The currency business market share improved by 700 bips year-on-year and another 360 bips quarter-on-quarter to 18.5%. We added over 1,100 franchisees during the year, taking our total franchisee count to a tad over 8,000. The institutional equities team continues to report leading ranks in the Asia Money Broker Poll 2022 as well. with number 1 rank in corporate access and number 2 ranks in sales and execution. Turning to the asset and wealth businesses, I highlighted that we crossed the 1 lakh crore AUM mark across these businesses. The net yield for these businesses stood at 75 bps on this 1 lakh crore plus AUM. The asset management business reported revenues of 131 crores for the fourth quarter and 555 crores for the full year. The mutual fund AUM stood at just a tad under 30,000 crores. We've seen turnaround in the active mutual fund scheme performances, where 5 out of the 7 schemes are ranked in top quartile. This has led to an improvement in cross sales and a decline in redemptions. We added 91,000 new SIP clients in the fourth quarter, up by nearly 40% quarter on quarter. The SIP flows market share improved by 30 basis points quarter on quarter. Our share of alternate assets comprising of PMS AIF stands at about 35%. As far as the private equity business is concerned, the fee earning AUM crossed 10,000 crores. In fourth quarter, the revenues grew by 18% year on year to 55 crores and grew by 36% year on year for the full year to 177 crores. The wealth management business AUM grew by 51% year on year to 52,000 crores. We had strong net sales of 5,800 crores, up by 8% year on year. Our revenues grew by 37% year on year to 65.7 crores for the fourth quarter, and by 14% year on year for the full year to 223 crores. We had a gross relationship manager addition of 63 in the last 12 months, taking the total count to 182 RMs. We'll continue to invest in this business by further RM additions. The overall asset and wealth business revenues stood at 252 crores in the fourth quarter and 955 crores for the full year. Our profits stood at 66 crores for the fourth quarter and 258 crores for the full year. Turning to the housing finance business, we reported a full year profit of 133 crores, up by 44% year on year, and a fourth quarter profit of 31.5 crores. Our NIIs grew by 9% year on year. NIMs expanded by 37 bps to 7.7%. Disbursements grew by 57% year on year to a little over 1,000 crores. We believe that the runway for growth in disbursements in this business is meaningful. Our yield on advances stood at 13.9% for the full year. Cost of funds were down 24 basis points to 8%, and as a result, the spreads expanded by 21 bps to 5.9%. Our collection efficiency continued to see improvement, coupled with decline in bounce rates. Our gross NPAs at the end of the year stood at 1.1%, led by a 101% collection efficiency in the fourth quarter. We increased our rates by 50 basis points effective 1st of April 2023, and have cumulatively raised our rates by 100 bps till date. The net gearing for the business still is quite low at 2.2 times, and our tier 1 capital adequacy for this business remains robust at 50%. Turning to our fund-based activities, we have total investments including unrealized gains of 4,630 crores as of the end of the year. Within this, the total equity investments including alternate funds is at 4,280 crores, and the cumulative XIRR since we started making these investments stand at about 16%. To sum up, we've delivered reasonable performance in the year ending March 2023 despite market headwinds. The retail broking business continued to consolidate its market position by adding 1,100 plus franchises and improving its market share through the digital initiatives, and also benefiting from market expansion, particularly on the F&O side and the industry consolidation that is underway. We continue to focus on our strategy to diversify our businesses towards more linear sources of revenues. Asset and wealth businesses crossed a lakh crore AUM. Asset management business saw improvement in performance. Wealth management business saw strong relationship manager addition. Private equity business saw the largest ever fundraise. Housing business saw improvement in disbursement and profitability, and we believe that each of these businesses have meaningful headroom to grow in the coming years. Thank you, and we are now open to Q&A.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Yash Nerurkar from PPFAS Mutual Fund. Please go ahead.
Yeah, hi. Thanks for the opportunity. So firstly, I wanted to get a sense of what's happening in the broking business. I mean, we have seen a year or two of, rapid activity in the number of accounts which are open. So going forward, what do you think it will be? Because are the active, numbers looking a bit slower, or, what would be the trajectory for it?
Yes, we are not able to hear you. Are you using the speaker?
Management members, the line of Yash has dropped from the question queue. We move on to our next question, which is from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Hi, good afternoon. On the broking business, which is the last business and margin funding business, are you seeing margin pressures because we've seen that the interest income has grown far lower than the interest expense? And, do you think that this business, given the fact that there was some volatility in the markets, will find at least the lending book will be difficult to grow? So that's question number one. And question number two, I'm just trying to reconcile, in the housing finance business, the AUM doesn't seem to have grown so much, though the disbursements seem to have grown. Is it more back-ended? Are higher interest rates causing any slowdown in growth? And how do you see this business going forward? That's it from my side. Thanks.
Yeah. Hi, Vivek. So on your first question on the broking business, the overall margin funding book, actually, if you see YOY, this book has grown almost 50% for us. So one is the book size has grown much faster. And secondly, in terms of the overall NIMs, the borrowings are dependent on short-term sources in case of margin funding, given the very nature of this lending. So the interest rates have got repriced, but if you see the impact of that is almost 100 basis on the NIMs in the current financial year, but you have seen more growth in this year to compensate for that. So overall net to net, the NII is up 25% on this book. And on the housing finance side, if you see the overall disbursements for this year, we had 1,000 crores of disbursements. We have crossed this mark this financial year. And overall, there is a prepayment rate of about 18 to 19% of the AUM. And that is also because of one of the major things, also the CLSS subsidy which came to us in the year. Bulk of the subsidy came to us, which has resulted in that reduction. And quarter four has been a strong disbursement growth quarter. We did almost 360 crores of disbursements in Q4, and that is how you will see the overall interest income getting amortized.
Mr. Ramakrishnan, do you have any more questions for the management?
Yeah.
Ladies and gentlemen, since there is no response, we move on to our next question. Our next question comes from the line of Vinod Chandra Agarwal, an individual investor. Please go ahead.
Yeah, thanks for the opportunity, sir. And I have a few questions about brokerage business and a couple of questions on the PAR question. So on the brokerage side, first I just want to understand, like in the last Concall, we say like our cost of acquisition of client is around 2,500 per client, and I think we have added around 6.5 lakh clients. So I just want to understand the breakup of like how this it makes around 160 crores spend. So how do we like spend on, for example, like reversal or something kind of So where I find out in the annual report, under which line item I can find out?
So talking of the acquisition cost, which is incurred, so that line item comes under the other expenses under marketing and brand promotion costs in the annual report.
Okay. And is there, will you be able to provide any rough bifurcation or an estimate bifurcation of like how much you spend on a brokerage reversal or some like direct acquisition cost kind of?
So whatever we pay the cost for lead generations are fully classified under that head along with the other marketing cost. So overall run rate of this cost has been to the tune of around 4 crores a month in this financial year.
Okay. And now another question is like we have around let's say 8 lakh clients as an active client. So and we acquired around 6.5 lakhs clients in the current year itself. And last year we acquired 8.8 lakhs clients. So generally what like as an individual, what I feel is that generally whenever a person opens an account, at least he will trade from 1 or 2 trades he will take because that's why he is eager to open the account and trade. So if I see something like around 6 lakh years, so is it something like only 2 lakhs clients were from the last year or the previous year which were active and only like some amount? So can you do like how much of these clients are active from the current year and how much clients are active from the previous year?
So the current year activation ratio has been 26% on the new clients that we have acquired, and the overall activation ratio stands around 4%. Incremental it is up. Overall activation ratio has actually been in line with how industry has performed. A lot of actually active clients have reduced across this, and if you look at our numbers, relatively we have been better in terms of the overall reduction.
Mr. Agarwal, will you please unmute your line and if you would like to ask a question? Since there's no response from Mr. Agarwal, ladies and gentlemen, if you wish to ask a question, please press *1. We move on to our next question, that is from Pujan Shah from Congruence Advisors. Please go ahead.
Hello. Am I audible?
Yes, Mr. Shah.
Yeah. Okay. Thank you. The first question would be on the home finance. So as we are saying that we are diversifying borrowing, the borrowing profile has been reduced the cost by 20 bps. So what are the steps we are coming on to for the future planning so that like what are the estimation of the reduction of the cost in coming for FY24 specific, because the yield are becoming stable and now I think the interest rate will be start also declining as per the what the market is estimating. So are we estimating the spread to widen up due to the cost of reduction or reduction of cost, or we will have some improvement in yield as well?
Yeah. As far as the overall cost of funds for FY23 is concerned, the cost is lower because on account of 2 reasons. One is we have improvement in the NHB borrowing mix in our overall source of funds, and secondly, the overall impact of the MCLR repricing has also averaged out, and bulk of that would also come in the current financial year. So to that extent, so on an 8% cost of fund base, currently the cost of fund stands at 8.25. As far as the opening cost of funds is concerned, for FY23-24, and we expect the cost of fund to marginally rise from here for to balance MCLR impacts. However, we have also improved our lending rates by 100 basis points in two tranches, starting Jan 1 of this year and April 1 of the current financial year. So we believe we would be able to maintain the overall NIMs and spreads in the business.
Sir, to the right question, so if we are increasing the yield in the home finance, so I just wanted to know what are the competitive advantages that the customers are driving to us, especially when the yield are so high on the home finance. And I wanted to also ask that what is the average ticket size we are providing loan to the people?
The average ticket size is 9 lakhs for us in this business. As far as the competitive advantages are concerned, we have so one is certainly our rates are very competitive in the market, given that our ability to raise low cost resources. And secondly, in terms of TAT, we have a very fast TAT of disbursements as far as the customer is concerned. And third is our brand as well, given our brand presence across so many cities as a group. We have that edge where our brand stands strong across pan-India customers in this segment as well.
Okay. And last question would be, how will be the cost to income trajectory for FY24 and FY25? Because there is some bit of increase been seen from like for the FY23. So what are you eyeing on for that?
Cost to income would marginally be higher, given that we are actually investing in talent in this business. Even in the current financial year, we added employees, and this would continue over the next couple of years where we would keep investing in the talent in this business. So to that extent, cost to revenue growth. However, given the overall improvement in the growth, that the NIMs would continue to be stable.
Okay. Thank you so much, sir.
Thank you.
Thank you. Our next question comes from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Hi, sorry, this is Vivek again. Our line got cut when you were answering my question on home loan growth. I'm really sorry. Could you answer that again? And on the broking business, do you see, I mean, where will the growth come from? I asked about the net interest margin, but, you've grown your book significantly. The margins you said have come down, but, how does the scale up happen from here on? Thank you.
As far as the housing finance business is concerned, so on the disbursements, the overall disbursement was 1,000 crores for this year. However, we had repayments and prepayments of almost 19% of our opening assets. That is also on account of the CLSS subsidy that we have received from the government in this business, because bulk of the subsidy came in this financial year for us. And the growth in Q4 was very strong, where we did 360 crores of disbursement. So that is one of the reasons where you will see the overall improvement in the interest income is lower, because in line with our average loan book growth. On the broking business side, the overall NII, I explained that is up 24%, and with the overall metrics in this business, where apart from brokerage, we are also strengthening the overall other revenue pie in the business in terms of the distribution revenues as well. So we see a meaningful improvement in our distribution revenues, our lending book revenues, and advisory-related revenues in this business, apart from the overall brokerage growth. Brokerage-wise also, derivative volumes have been growing very strong, if you see year-on-year, and even year-on-year, we are able to improve our derivative market share by almost 100 basis in this business. So we see that with this whole traction, despite the market cycles being down or up, we see a good amount of derivative pie getting more linear in terms of our revenue growth.
Sir, thank you very much for answering my question again. Wish you the best and apologies again.
Thank you, Vivek. No worries.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star 1. Our next question comes from the line of Kajal from ICICI Securities. Please go ahead.
Hello. Hi, sir. So couple of questions. Yeah, hi, sir. So I just wanted to first know that we have seen such a sharp surge even QOQ basis on the F&O volume, but the overall brokerage revenue has been sequentially lower. So is it the cash substitution which F&O has done, or what will be broad breakup of cash and F&O in this brokerage revenue? That's one. Second, I wanted to understand if you can give more clarity on this MTM total that has come, which is from which asset class has been how much. And third, if we can also get, like if we have seen Angel has given some very good disclosures in this quarter, which are like they are giving how much a customer when he comes first, in the first 12 months of his trade, what is the kind of revenue he gives? So if he gives 100 in a year 1, what is the year 2 revenue of that customer? Like is it 60%, 80%? Maybe something like that if we can get. Yeah, those are the 3 questions. Thank you.
Yeah, sure. Ajay, you want to take the first question? Yeah, Ajay, you are there? I think line is up. Coming to the first question on the cash and F&O, market volumes were down almost 17% on the cash side of our business, and that is also one of the reasons where the overall brokerage revenues were down almost 6% on a quarter-on-quarter basis. Secondly, even there was a lot of focus in quarter 4 on the distribution business and on the lending business, and that is also one of the reasons where we've seen, in fact, the other revenue pie also growing in quarter 4 of this year. Coming to the mark-to-market question, mark-to-market actually, if you take a look on our opening investment book, the overall return is almost 3%. So while Nifty was flat, still our book has delivered opening 3% mark-to-market gain. And what you see is also a blend of expenses on account of our real estate investments that we have done of interest costs in that mark-to-market book, and that is the reason where you see the net income of that book at 50 crore rupees. If you could just repeat your third question.
Third question was more of a disclosure kind of thing. That was like if suppose a customer comes to you, is becoming a customer in year 1, what is the kind of revenue he may be giving? So suppose it is 100. So what do we see the trend in year 2, year 3 of that customer? So 100, then next year it becomes 60%, 80% or 120%. What will be the trend in year 2? What will be the year 3 of that same customer? So they have made cohorts of customers, and that was a disclosure.
Yeah, so there are multiple channels in our business, and definitely we can separately put out that data if you require that details. Yeah.
Okay. Sir, I did not get clarity on the first question. Like brokerage, when we are saying F&O cash has declined, I understand, but then how much of the overall brokerage share will be cash and F&O broadly?
So I'll answer that, Shali.
Yeah.
So overall, the brokerage, if you look at it, the share from the cash market will be around 45% and F&O will be around 55% of the overall breakup. And to that extent about the overall, if you look at the overall market itself in this last quarter, it was comparatively down, and the overall volumes itself in the cash market is down. We have tried to see to it that we have able to maintain the revenue to the extent possible from the F&O side to compensate on the cash side. And to that extent, we have been able to maintain ratios with around 4-5% downside. That's the whole thing for the quarter. At the same time, the distribution revenues have gone up commensurately very well in the last quarter across different products, including insurance.
Okay. So, and for the second question, which you have said, what are these expenses that you said because of which I am seeing 50 crore?
Yeah. So actually that includes mainly the interest cost on the real estate developer NCDs that we actually warehouse on our balance sheet and then gradually downsell it to our wealth clients. So what you see is while we have the interest cost on that, but bulk of the gains comes when these NCDs are actually realized as redemption premium. So to that extent, you will see a bump up of the interest cost, which will come in our the prop treasury book.
Okay. Okay. Thank you very much.
Okay. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star 1. Our next question comes from the line of Yash Nerurkar from PPFAS Mutual Funds. Please go ahead.
Yeah, hi. Am I audible now?
Yeah, yes, you're audible.
Yeah. So firstly, I wanted to ask about the broking business. I mean, the past 2 years, we have seen, the kind of activity which has happened. I mean, the accounts grew at a rapid rate, and we saw the active share for almost all the brokers increase. So going forward, we have seen some slowdown.
Management members, the line of Yash Nerurkar has just dropped from the question queue. We move on to our next question. That is from Ansuman Deb from ICICI Securities. Please go ahead.
Yeah, hi. Good afternoon, and thanks for the opportunity. My question was regarding, outlook on broking share. Like we did a good improvement in this year, but quarter 4, I think, what has been the trend in quarter 4, especially, and what is the outlook in terms of broking share? And secondly, there is a dip in the PMS AUM in the wealth management. So if you can give some clarity on that.
Actually, you take the first question?
Yeah. So I'll take the first one. As far as the broking business is concerned, as you must have seen the last year overall across brokers, the active clients have come down in a big way. As far as we are concerned, we are very clearly focusing on the quality client acquisition, and that has been the benefit for us in the overall market share growth in the FNO. And we see that this trend can improve even going further with the focus on quality accounts and the overall ARPU of the customers. So our focus will be on getting quality acquisitions in terms of cash as well as FNO. At the same time, the MTF book is increasing in a good way, and we can build the overall AUM based on the MTF book also. Parallelly, the distribution side of the business, there is huge scope to grow the business there. And last year, again, we have seen good traction on the distribution business. So all in all, overall on the business side, we feel that we will be able to build traction. But as you all know, the market scenarios can always have its own inputs. So to that extent, we'll be always careful in how to build the business going forward.
Yeah, and one follow-up on that in the sense that, when the markets are not doing so well, I'm saying that the distribution and the lending, are you seeing a relatively better traction which can lead to a stabler performance irrespective of cycles? So has there been a dichotomy between how the broking revenues have panned out and how this distribution and lending streams have performed?
So as far as the market dynamics is concerned, the good thing is that because of the options market growing in such a big way, there is some amount of stability in the business numbers when it comes to the market being negative or sideways because the options are increasing.
Right.
To that extent, the brokerage is relatively stable even in a downtrend market. In the margin funding book, we usually see a lot of scope because of the regulation change that the things are becoming more easier to fund on the MTF side, and where there is opportunity because we see that the cash market volumes should come back, and there's the opportunity for MTF will increase further. And distribution, anyhow, our penetration has been comparatively lower, and we see the potential to grow the distribution book independent of the broking. So that anyway, year on year, we are building the growth there, and we see no reason why the growth cannot keep on improving at least over the next 2-3 years.
Understood. And on the PMS side?
Yeah. So if you look at the AUM for wealth in PMS and AIF, because we count both together, it's gone up from 8,400 to 8,600 crores. Also, if you see the alternatives piece, the AUM has gone up from 3,700 to 4,400 crores. So overall, the AUM has grown in these three categories.
Right. So any specific to PMS would be relevant, do you think?
So the choice of products keeps changing depending on the client preferences. So AIF AUM has gone up, but PMS sales have been flat to down.
Understood. Thanks a lot. Thank you.
Thank you. Our next question comes from the line of Sahesh Mittal from HDFC Securities. Please go ahead.
Hi, good afternoon all. Thanks for the opportunity. So first is on the broking business. So what's your outlook for FY24 now, given that the cash volumes are already down 20% versus the kind of growth which we have seen in the derivative segment? So do you think that in FY24 there will be some respite in the cash segment, and what is your outlook for the derivative segment? That is one.
Yeah. This is Ramdev Agrawal. The way markets, with my experience, the cash volume is typically for the much smaller companies, mid and small caps. And that is also function of when those companies they start doing well, when the economy is in second or third year of expansion. So now this year, 23-24 is the second year of expansion. My sense is that in trickle-down effect, all the mid and small cap companies will start seeing the benefit of the recovery of the economy. And hence, the moment earnings profile build up 25-30% for the smaller companies, I'm hearing some of the companies 100%, 200% kind of earnings growth. A lot of ideas are coming on the desk. I think now the mood will be there to do a lot of cash trading, because these companies will not be typically listed in the options and futures. My sense is that second half or this year itself, the cash volume should pick up, basically led by mid and small caps.
And sustainability of derivative volumes?
Sustainability? You said? Yeah, that is the same.
Yeah, so see, overall F&O volumes in despite this last financial year also, the market has actually grown, and in fact doubled in terms of the volumes, because more the volatility, more the actual growth in the F&O volumes. That's what is the case. So even if first half of the year we are projecting more volatility, the F&O volume will still continue to keep growing. And once we see the cash volumes as well, so we'll see the impact of both of these coming into.
Right. Second is in the asset management business, if you could split out the net flows across the segment, mutual fund, PMS, and EIF.
Talking of the quarter 4 of this year, right?
Yes, quarter 4, yes.
So quarter 4 wise, so net sales in mutual fund was 5.2 billion positive, and overall alternate wise it was 2.2 billion of outflows.
And within 2.2, the split between I guess AIF was positive, so PMS would be more than 2.2.
Yes, that's right.
Got it. And outlook on the wealth management business, given that we've been investing quite heavily in the wealth management business, so how do you look at growth for the next 2 years maybe?
Yeah, so the size of opportunity is large for wealth management, and we continue to invest in 3 areas. Basically, we continue to invest in hiring
good wealth managers. We continue to invest in growing our client franchise. And thirdly, we continue to invest in the products and platforms. So these are the three basic growth drivers. We believe that the last 3 years, the growth can continue into the future as well.
Right. And any targeted operating margins for this business?
So currently, we continue to invest in this business. So margins could be probably at the same level going, and then they would improve because as the mix of the vintage of RMs improve, because as we continue to invest in talent, the RMs in the 0 to 1 category tend to go up. And as the RM vintage matures, you will start seeing margins improving.
Got it. Thanks and all the best. Yeah.
Thank you. Our next question comes from the line of Dhruvish Pujara from Premji Invest. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I have two questions. First, on the NSE client base, which gone down to 8 lakh from 9 lakh sequentially. I'm not sure whether you already touched upon. I joined the call late. So what explains that, and how do you see this in the next 2 years in terms of positions in the broking side? And the second question is on the float income. So I think that if I understand it correctly, the FY22 float income was 129 crore. So what that number would be in FY23, and how do you see that number moving forward with the upstreaming regulations coming in place? And also, if you can qualitatively explain the moving parts of the float income pie. So yeah, those are my two questions, and thanks.
Yeah, Jim, take the first question.
Yeah. So as far as the active client is concerned, surely you have seen across the industry there is a fall in the active client base in a very big way. Compared to that, the fall at our end is comparatively lower. But to that extent, we are only looking at hiring more and more quality accounts. So we feel that this active client ratio will only improve in our case as we look forward to hiring more and more clients which are more from a higher margin base. So actually, if you have seen the last 2-3 years, the client base has increased in a very big way across the industry. So there can be consolidation in this number if you see the trend in the market and the overall market scenario. So, but we are very clearly focused on the quality accounts, which we see that it will be which we can keep on improving going forward.
Yeah. On the second question, the float income for FY23 is approximately 150 crores number. And in terms of the new regulations, so one is, of course, we're talking of the ASBA regulation. So at this juncture, the ASBA mechanism is actually optional in nature, and it would be difficult to comment on the broad contours at this juncture. So, but given that we have larger amount of our customers in mass affluent segment, the impact of that would be minimal on us. And even the UPI block size, ticket size is pretty less at 5 lakh rupees. So the mass affluent HNI clients typically don't much get fit into this concept. Secondly, in terms of the circular which had come on 29 March and even on 25th April, as far as the overall upstreaming of the client funds. So there would be a marginal impact of approximately rupees 5 crores per annum on the because upstreaming of the bank guarantees is not permitted. So while we have a very strong capitalized balance sheet and overall we see this impact to be very minimal on us at this juncture.
Okay. So do we expect this like 150 broadly to stay as it is in FY24 apart from the 5 crore which you mentioned, or do you see that marginally going down if not going up? So.
It may marginally go up from here because the overall the current overall FD rates are going up, and the overall creditors are also enhanced in the system.
Got it. Thanks. Yeah.
Thank you.
Thank you. Our next question comes from the line of Deepak Sonavane from Haitong Securities. Please go ahead.
Yeah. Hi, sir. Am I audible?
Yes, you're audible, Deepak.
Yeah. Thank you for the opportunity. So I have only one question, and that is with broking industry. Especially for us, if you see that over the last 4-5 quarters, or even if you compare FY23 versus FY22, we have seen a very sharp drop in our gross sales, right? For core broking gross sales. I understand that. Within that, cash segment yields has been holding up really well. But for FNO, we have seen a very sharp drop in gross sales. That could be materially impacted by very high growth in volume. But I just wanted to understand whether there is a voluntary drop in yields. Just because of pressure from, competitive pressure, or else retaining those clients within the MOFS, the boundary. So can you just comment on this?
So on the yields, actually, if you see, the drop is only on the option side of the business. So for us, the other segments have not seen any drop in the yields over many quarters. And options is, again, for us, we have one of the highest ARPUs in the industry. So we've seen some bit of reduction because one is market volumes are growing, and not only apart from that, we are also improving our market share. So you are having that double positive whammy. So there is moderation in the overall option yields, which is happened. It's more across the industry given the low rates which is there, whereas still we are one of the highest revenue per orders in the industry.
So because if you could comment, this moderation in option is any number that you get that would comment, in BPS, how it could have been deepen, drop for us, voluntarily over the last 1 year.
Overall, there would be moderation of almost, I think, 1/3 in the overall yields, which could be the number. I can specifically call out that number, but that's the broad number.
Okay, sir. Thank you, sir.
Okay. Thank you.
Thank you. Our next question comes from the line of Kajal G from ICICI Securities. Please go ahead.
No, sir. My question related to upstreaming, it's already answered. Thank you.
Thank you.
Thank you. Our next question comes from the line of Vinod Chandra Agarwal, an individual investor. Please go ahead.
Thank you, sir. Last time my line was disconnected and was not able to hear, so I will continue with the same. My question was, I was trying to understand our client activation. So in that regard, you said like we have a 55 lakhs of clients and 35 clients. So can you just try to help me understand that where is this gap of 20 lakhs clients?
Yeah, so those 20 lakh customers are actually our customers of our asset management business, on predominantly on our mutual fund and alternate assets.
Okay. And this 8 lakh active client is just within the 35 lakhs client, right? Not from that.
Yes, that's right.
Okay. And if we do the distribution business as well, so this brokerage is the only considered in the activation, or the distribution is also considered as an active client? Some in the capital market directly, but they might be doing the investment in the mutual funds and other distribution products. So if we consider within the distribution product also, what could be approximate our client activation ratio out of 35 lakh clients?
So this 8 lakh number is actually the NSE active clients, so it only pertains to the brokerage business. On the distribution business, 16% over. The overall penetration is 16% cross-sell. So on this 35 lakh client base, we have actually cross-sold to 16% of the total customers at least one distribution product.
Okay. So does it mean like an overall, if you consider mix both of them and consider what could be the number? I mean, 15% if you take, then only it takes like around 4 lakh, 5 lakh clients additionally?
Yes. So
the right number?
So there will be an overlap on these customers who are doing broking. Customers will also be doing the distribution business. So it will not be exactly the additional customers to that extent. There will be some 10% that might be separate who has not done broking.
Yeah, unlike the broking business where if a customer does not trade in a year, it is inactive, right? In the wealth management business or in the asset management business, if you're earning trail income or annuity income, they don't have to trade. So actually, 100% of AMC clients and 100% of wealth clients and 100% of private equity clients and real estate clients and all those distribution clients are active because the firm's earning revenues every single day. So I think all the clients in all the other businesses are, I mean, there's no concept of active ratio. It's only prevalent in the broking business because there's a possibility that you may earn zero revenues if there is no trade by that client during the year. So, I mean, you have the actual broking numbers. All other clients of all other businesses are actually active clients.
Mm-hmm. Okay. So after like inactive clients, like can you give us like some sense like what you understand? Like our advisor would have talked to them who are inactive, other than like totally inactive, I would say, not on the distribution side and not on the capital market side. Both the sides they are not doing anything. What our advisor feel about like even though like one. They are not interested or they are finding somewhere else in lower advisory or fees or something kind of. What is your sense is that on that part?
Well, it could be.
I'm just trying to understand the effectiveness of our advisory. That's what I'm just trying to understand.
Yeah. No, it could be a combination of all that you mentioned, and it could be to do with the circumstances of the client themselves. So really, it could be due to competition. So we don't have really a breakdown of the various reasons why a client is inactive. All I can tell you is that both physical as well as digital channels within the group are active to try and improve the activity ratio. So I mean, there's a budget and an expense and resource allocation to improve the activation of the clients across all the businesses and to increase the cross-sell as well. But really, the attribution of various reasons is not very clear.
Okay, no problem. And on our MTF book side, I feel like it's a new pivot for the broking industry itself, from the moving from the brokerage industry to this lending book. It seems like a pivot. So that looks like good. So if you can just give your understanding or your vision to that MTF book side, and if you can just tell us like how many number of clients are currently using MTF and what is their median ticket size, like lending ticket size.
So as far as the total clients is almost 8,000 customers in this MTF book.
An average or a median ticket size to them?
1,825. Almost it would be 50 lakh to 1 crore.
Okay, great. So that seems like an HNI client, right? Most of them.
Yeah, that's right.
Yeah. Okay. Good. Thanks. And one more on this real estate fund side. So I think we were about to launch a fixed fund. So when do you see that next fund is going to come?
Can you just repeat the question?
Yeah. On the real estate fund side, I think the fixed fund we were supposed to launch this year or this quarter. So is it on track to launch in this next year?
Yes. So we will be launching the sixth fund in the course of this financial year. We have already got the SEBI permissions to float this fund, and the team is working on the broad contours of that.
Okay. And this real estate fund is mostly like a debt product or it is a equity product?
It is a investment in the developers as far as funding the land stage transactions or finance transactions that we do in our real estate fund management business.
Thank you. Ladies and gentlemen, as there are no further questions from the participants, I now hand the conference over to Mr. Shalil Badra Shah for closing comments.
On behalf of Motilal Oswal Financial Services, I would like to thank every investor participant to attend this conference call for Q4 FY23. In case of any further queries, please do get in touch with me or our investor list. Thank you and have a good day.
Thank you, sir. On behalf of Motilal Oswal Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.